Hello and welcome to the last session of today, which is a fireside chat with John Carrol around the subject, what does sustainable SME finance actually mean? John, it's a huge pleasure, as always, to talk to you about SME trade finance. Your role as head of international transactional banking at Santander means that you have a particular angle on all of this, and we enjoy talking every single year. But last year we talked a lot about banks, we talked a lot about SMEs, a little bit about sustainability, and how the three are all being conflated together. So last year, when I was saying to you what is going to be the subject areas for 12 months time, you said, well, we're going to be talking about modular technologies, but the most important thing is that we need to understand the SME client journey, and we need to be able to build solutions around that. Tons of aspiration, lots of work and lots of water under the bridge in the meanwhile, and I guess the other thing that's happened is we've begun to work through COVID and we've begun to work through Brexit, and after the last financial crisis, the banks came out with a lot of challenges, I think it's fair to say, and a poor reputation. And someone said to me, we need to make people love banks again. So now we're in this position where we've gone through COVID. And banks have done an enormous amount around that, and there's a whole ESG agenda that banks are trying to help with as well. So is this actually giving banks a real set of challenges in order to be able to realise that opportunity? And what are your clients saying to you about this journey?
It's good to see you again, Rebecca, as always. Great to see you. And I think we'll tackle some big issues today around trade and SMEs, but there's one issue which is a step too far, and that's for banks to be loved. So if we could lower the bar, that'd be fantastic. If that's
the talk of loving your bank is a strange thing. I mean, you know, but maybe, but seriously, there is a reputational thing there.
In all seriousness, as you know, as the person who founded the Barometer, which we've now on the 12th one, I will always bang on about understanding the SME trade journey, and that's why I don't like to. We'll get into more detail in a second on sustainable trade finance, but I think it's important to understand the whole journey, and hopefully that'll become clear throughout the session. So we've just done our latest trade barometer, which was released last month, and again, for me, the key highlight and the reason why the work you do and we're all trying to do is so important. It shows the importance of international trading SMEs. So, overall, this is a survey, as you know, which focuses on those companies. 73% are confident of growth over the next 3 years, and they performed better in the pandemic than pure domestic companies, and are more confident of growth. So these are the ones which drive jobs, whether they be in Birmingham or in Hanoi. These are the ones which we have to look out for. But they do have barriers, and that's why I think we want to go into those barriers. And it's interesting, and I think some of your audience potentially is beyond the UK, Rebecca. So there's 5 broad challenges, and I'll probably touch on some of those which are common to everybody, some which are specific to those of us who are in the UK, and some which are a bit more specific to developing countries. So the 2 things which I think, there's 5 broad challenges, by the way. So one is the very obvious one, which is for everyone who runs a company. How do I get more jobs? How do I get more contracts? How do I grow my business? The second is to deal with bureaucracy. The third is logistics. The fourth is to be able to handle the skill problem. And the fifth is finance. Now, 2 of those have really noticed a big pickup over the last year since we last spoke, and they are common. And they've been also made worse by the pandemic. One of those is growing connections. So companies tell us, well, look, I can't get on the plane, so it's harder for me to get out there and get new. I can't grow my business without traveling. Can be done though. So we've done 100 trade missions this year, virtual ones, and have got tonic companies in Brazil and women's health products into the UAE pharmacy. So it can be done, but it is hard. So obstacle one, but that's common to everyone around the world. They can't get on the plane. The second one is logistics, which perhaps we can touch on a little bit more detail in a second. But logistics, to give you an idea, the cost of a containerized freight from Asia to Europe is 621% higher than this time last year. So that is a big factor. But I think probably logistics is worthy for us discussing a little bit of detail in a second. Then you have some issues here which are very specific to the UK. One is bureaucracy, because there's been a small issue. You probably missed that, Rebecca, but we had a thing called Brexit, which happened earlier in the year.
Off my radar screen.
Off your radar. So I'll give you a bit of an update on that. So that some of the surveys were 38% of companies who export said it is the current deal is not sufficient for them to keep trading with Europe. 78% means the deal implies additional costs or delays, and 18% say their supply chain is no longer sustainable. So bureaucracy is always an issue, as you know, but in the case of the UK, particularly pronounced in terms of Brexit. Skills, the issue of skills. Skills for me has two parts to it, and I think this will, the second point we'll get towards, we get to the end of our conversation, but the first part on skills is that 2/3 of companies, and these are the ones who are confident of growth, Rebecca, who want to create jobs, that their ability to grow is dependent upon getting the right skills over the next few years. And it's been particularly pronounced in the food and drink sector, the agricultural sector, hospitality sector. So those sectors are really concerned about that. Then there's an issue which we sometimes forget, and which you and I hopefully will bring out through the conversation. It's the skill set of a company. So 53% of companies say they don't have the ability to in-house to navigate world trade, to navigate red tape and all those other issues. So that skill set is something we need to bear in mind as well. So we then get to the final point, which is finance. In the UK, there's two aspects of that. If you're the best exporter in Birmingham, then banks love you because you do 7 or 8 products and you grow faster, you default less. So you don't tend to have big problems with finance. Only about 7% of experienced exporters say that. New exporters do have a big problem, and that's what we need to look at in a second. But for colleagues who are outside of UK or in the US, a much bigger issue is finance, right? And that's the continued problem we have with the de-risking of international trade via correspondent banks being separated from the main developed market systems. And that makes it very hard for banks to be able to engage with second-tier banks in developing markets, which reduces the pool of finance of those companies. So they're broadly the 5 broad issues, Rebecca. Some common, some pronounced, very specific to the UK, and some which are quite relevant to developing markets.
So just coming back on that to some extent, interesting, because we run an analysis of UK exporters as well, as you know, and it's actually a quantitative analysis, so it's very complementary to what you do. And one of the things that we found was there was a huge, just focusing on UK exporters, huge spike in the number of UK exporters, okay? But in actual fact, what they're exporting has actually declined. So the amounts that they're exporting has actually declined over the last 5-6 months, really severely. And the reason for that is, as you say, this strange thing called Brexit, which is that suddenly companies that were exporting as part of value chains, supply chains, or doing things in a different way, suddenly they have to behave in a different way, they have to register, and there's a lot of compliance. So believe it or not, the number of exporters increased by 60% between January and February. I mean, that's incredible, but that's bureaucracy. So we've also noticed a really big difference between the larger businesses, the medium-sized businesses, and then the ones that are smaller. And it's the smaller ones that actually struggle along that journey. It's the ones that have lower turnovers, fewer employees, hugely aspirational. But we think in terms of revenue and employment, those are the ones that struggle most. Is that what you're seeing as well?
Yeah, it's a couple of good points on that. I think one is, you're right. I mean, we ask companies where they're present and where they see future growth. And interestingly, for the first time, we've seen North America just pit Europe as the source of future growth. And you are seeing an increase in other markets taking place. Yet when you ask companies where do they have activity, 80% is in Europe.
Yeah.
Okay. So to get a new contract in India or South Africa is unlikely to compensate everything that you currently you're suffering from Europe. So I think that's a really important point, Rebecca, which obviously corresponds to yours. In terms of the impact of small companies, I definitely agree, and I think that the supply chain aspect is really important. We obviously have two issues here. We have a supply issue where freight companies for a number of years haven't made money, so there's been an impact on the supply of that, and you have this very point in time demand issue whereby even though we are back to some degree getting back to normal, we're not going to gyms as much as we used to. We aren't doing all these other services ones, but therefore we are still spending money on durable goods, and that's resulting in an increase in demand across the board. So hopefully it's temporary, but there are two things which I think are going to continue to cause concerns for SMEs. One is, as I mentioned, the freight companies are now making money. They're unlikely to reduce prices back to where they were prior to the pandemic, and that's something which we need to bear in mind, despite the fact there's all these mega vessels coming on in the next 6 or 7 months. And the other point, which is a real issue, is that the bigger companies are outbidding smaller companies for slots on ships. They can't get access to the ships, and that's why we've teamed up with an aggregator, a logistics aggregator, which basically is going to lobby on behalf of all of our SMEs to get differentiated pricing, but also to get those slots on the ship. So SMEs are definitely a disadvantage, but I think there are ways in which we can help them to level up, to coin the term.
It's really interesting, and the logistics point is an important one, because you tend to see SMEs at the bottom of the food chain, if you'll pardon the expression, in a lot of ways. They tend to be the ones that struggle. They tend to be the ones that are fighting for places, fighting for bandwidth, and particularly UK SMEs. I think it's important to say that they have struggled during the pandemic, and they have struggled through the process of Brexit, but they're eternally optimistic. And I think there are technological ways of doing this. You say you've teamed up with a logistics aggregator in this space. The amounts of technology, the amount of information out there has to be marshaled, doesn't it, in a way that helps those SMEs. So bringing together lots of different bits of technology. So the ICC's published 2 reports this year, hasn't it? One on the impact that digitisation could have for the SME journey, and the business case is really compelling around that. So how do banks work with those international organisations and create a standard platform so that all SMEs know that they're going to be able to access trade finance in a more seamless way? Because to me, this is literally the $1.7 trillion question.
And that's the right figure, isn't it?
It's exactly the right figure. You heard it here first.
Look, I think we need to understand the problem. So understand the problem, and then we'll get to where the solution. So the problem, I think, is from both sides. So from the SME perspective, they have a very poor experience, and I did make that reference before. I think the 50 million turnover company in Birmingham still gets looked after by this process, but it is that aspirational SME looking to get into 6-7 months, the company which should grow from 10 to 100. They're creating 90 jobs. They're the ones, I think, which we're missing, both in the UK and also in other parts of the world. So the problem essentially really is threefold. One is they don't know how to present to banks, these very straight banks. They don't know how to present the banks, so they actually don't have the time, and they end up providing the wrong information. The second thing is that the process for trade and for trade finance tends to be focused on the mid to large corporations. And so all the questions which are asked tend to be irrelevant, precisely. And the third thing is SMEs particularly, they tend to be much more digital, e-commerce based, yet, as you know, and this is the problem, there are 4 billion, and I repeat, 4 billion paper transactions for trade a year. So you have a paper-based system for trade finance servicing a global economy, which is now a 30% digital e-commerce. So a massive problem. From the bank's perspective, and I'm not going to defend the banks, I'm just going to give you the perspective of what it is. The problem is the banking environment is that the banking is a sector which basically is a private sector, and the more clients you have which basically require you to have costly systems, whether that be the paper-based systems, whether that be all of the very necessary anti-money laundering aspects, that increases the cost of the cost of service for the client. And therefore banks think, well, can I really afford to be able to serve those clients? Also add on in terms of the lovely mix that the BAL, which regulates our banking system, doesn't really reward trade finance as an asset that it should. Trade finance is the safest asset out there because underlying the transaction is a real deal, So that's the problem that you have both from the SME perspective and from the bank perspective. So what can we do about it? I think, and this is where the ICC, and put on my other hat, Rebecca, with Chris, who's doing such a great job in the ICC, is there is one thing, and I was yesterday with the Minister for Trade for Spain, and I mentioned to her, and she's very interested, is that I'm going to repeat ad nauseum the model law for electronic transfer records, which ICC is pushing. That's absolutely crucial. There is a common standard, and then we start digitizing processes. The UK and Singapore are amongst the most productive and the most proactive in those areas. So to get that is really important. And then BAL does need to finally treat trade finance as the proper asset that it should be. But the key thing, what will allow the rivers of gold of data to run through, is we must get a common law. And there is a blueprint now, which the ICC is pushing, which everything else can go back on. But then banks need to also respond as well. So banks must basically digitize their processes. Must digitize their processes, which has not been done. And because now most SMEs are using their Xeros and other accounting platforms, link our platforms to their own internal platforms so that we actually understand their business rather than impose a straitjacket on their needs. So that's what I think needs to happen, and everything must be underpinned by a global acceptance of digital transfer records for international trade.
So, I mean, just on that, and I've been fairly heavily involved with all of that, and Coriolis has been heavily involved with all of that as well. The biggest thing is actually this reduction in costs, isn't it? Because I think if we focus on that, then it has real, you can actually really start to understand the consequences for the SME, because if it's reducing cost by the amount that we think it is, which is around 75%, then it's win-win on the demand and supply side.
Well, and Chris, doesn't he? Quoted, I should say, they quote the 75-80% figure. That's amazing. I'm not sure what the previous big initiative was, the trade facilitation agreement, Rebecca, which was great. So that reduced the times of ports, but I think that was greatly below that. So this is such a game changer, but also can increase global trade by a huge amount as well, but also reduce the time to be able to do business. So it ticks every box, and that is why every time I meet a minister, every time I travel around, I am on about this one initiative, because it is literally the ingredient of which everything else emanates.
So just to push you on that a little bit, every single bank should be digitizing, because the scope here and the reason why it's having such a big impact on trade is because it's opening up this SME market to banks in an affordable way for banks, as well as creating a sustainable and cheap alternative and smooth alternative for the companies themselves. So it's kind of the circular economy, if you like. It's how to make SME trade finance sustainable, so that even the largest banks in this sector who wouldn't normally touch SMEs, and I know Santander is absolutely in the SME sector, but the larger banks that wouldn't will be able to come down into this space if they can use these digital processes. Do you think they will, or do you think they should?
Well, I think if the banks don't do it, then the fintechs will, right? And I think this is the real challenge, and this perhaps can lead us on to the point of sustainable trade finance, Rebecca, because because I think we are really, when we discussed the year, it's an acceleration from where we were a year ago. So banks, and this is where I'm going to link a little bit, perhaps it's not discussed enough, sustainable trade finance in its broadest sense. Okay, so obviously we're listening to COP, and I think when we all hear sustainability, we rightly are focusing on climate change, but there are 17 goals from the UN in terms of the Sustainable Development Goals, which broadly fit into 3 broad categories. And there is a fantastic report which I recommend all of you to read. It's coming out this month from the ICC. It's a positioning paper on sustainable trade finance. It's a fantastic paper to set the scene. But the goals broadly can be put into 3 categories: economic, and that would include a more even society, SMEs being much more involved. So that is a defined objective by the UN, okay, as part of the sustainability goals, which is what ESG is all about, right? Second is human and social, so obviously ending hunger, fair wages, and the third one is environmental, which often gets confused as being the only one of the 3. So those 3 elements, Rebecca, are crucial for us to remember, because then I'll link it into why the banks don't have a chance to be able to do it. The second thing to mention on this is what the ICC in the report, what they've done this month, is they've tried to look at, and this is what I'll also give you a plug in a second as well, they've tried to look at the 5 components of international trade, and that is the good service itself, the characteristics of the seller, the characteristics of the buyer, the transportation mode, and the purpose of the activity. So this should ultimately start to get to the key missing factor, is some degree of acceptance of standards. Okay, and with that, I am always someone who will be saying that the large companies have it easier than everybody else, et cetera, and it's going to be much easier than the guys. I am actually here thinking that there's an opportunity here for the SMEs who are smart and nimble and proactive. And there's a good article in the FT yesterday on IKEA and how IKEA, I think, is generally regarded as being one of the more proactive ESG names, but there's been concerns that some of the wood that it's sourcing is not being properly, it's been in Russia and different countries, is not being properly processed. And I guess for a large corp, you've got potentially 14, 15 stages in the process, and you've got hundreds of suppliers. So banks like ourselves are going to be judged on what we do as a bank, but also crucially and correctly who we lend to. Yeah, and we've also seen lovely anti-banking signs about us in Glasgow, right? So the banks will need to address that very important issue. But there's 2 angles here which I think are really, really important for why the SME can benefit if they're smart and nimble. One is, if I can lend to trade finance, lowest risk asset, if I can lend to an SME which is green, gets the Coriolis golden passport, or the Cosmos golden passport, which says, yes, this is a green, and then fantastic. And it is easier for the SME to look after themselves rather than worrying about the other 13 parts of the supply chain. I think that's a really, really important point to get through. So then the bank can actually say, these are the companies that I'm focusing on. The other part, I think, which less for the banks, but also for the system, is fintechs. So you look at all these different the amount of money going into investment funds looking to lend to ESG friendly names. Well, trade finance is the best risk asset out there, good returns. But if the companies can say, look, well, I would like to lend directly to these companies, if they've got the badge, they open themselves to not only the banks, but a whole broader universe. So that's why, if the system works, and this is what we can get to in a minute, what has to work for this to happen, I think the potential for SMEs is actually quite good with this, provided they accept the challenge.
What's interesting about that is the role of banks in actually enabling all of that, because we used to talk about venture capital, and we used to talk about, the type of growth finance that was outside of the banking system. Actually, one of the things that's come out this week and will come out tomorrow as well is the fact that the banks themselves can finance this with the businesses that they're already working with and help them to become more sustainable through the process of sustainable trade finance. And the thing I liked about the ICC report, and you're absolutely right, it's a game changer because it makes everything so simple. And we can already measure things against the products and the services that the company provides and match them to sustainable development goals. That's one of the things that we're actually trying to do in Cosmos. So it actually then becomes something where the product that the company is engaged with and the way in which they deliver that product becomes their kite mark. And the ICC and the international community around the banking sector really is beginning to see that this has to be done together. So I guess my final question, it's been a brilliant discussion, and thank you so much. My final question is, so this is sustainable SME trade finance. Is it the responsibility of banks to enable this? Is it the responsibility of banks to take on board this ESG agenda, or is it everybody? Does everybody have to pull in the same direction, exactly the same way that the ICC is hoping everybody will on the digital side?
Very clear answer, all three, and let me tell you why. So let's start first with the SME. So with the trade barometer, we now ask questions about sustainability. And the concern for me from the barometer, which came out, was only 14% see it as a challenge. Only 21% have investment plans for sustainability. And most worryingly, looking at businesses who are basically profit centers, only 13% see it as an opportunity. So the SMEs must switch on, and they must see it as an opportunity. If you see it as an opportunity, then you'll grow. So that's point one. So the SMEs, this is a three-way deal. The second one, and I'll be like just a broken record for the policymakers, get a digital deal and get agreement on the standards for ESG. With those two things happening, then you go to the broader banking / private sector facilitation world. And if those two work, then let's let the private sector do what it does and see where the demand is and provide solutions. So in your case, you're going to provide a passport, which is going to be fantastic, which can be tailored to the company so that they can trade internationally. What I'm going to provide, which will be launched in Q1, will be, you've listened to me today talk about the big issues, the big 5 issues. We will have a platform like a Netflix personalized platform, which will tell you end to end what the challenges will be, but will link you to solutions. So we'll tell you this is the passport which you'll need from Cosmos. So that'll be from logistics through to connecting you to a distributor in Japan, through to a labeling requirement partner in UAE, end to end and global. Okay, that is something which we will do because we're going to try and innovate to be the leading player in the market, which will be beyond banking. But innovation is what will happen if the first two things, SMEs get it, policymakers come on board with standards, and then let's the rest of us try and grow the business for the SMEs, because sustainable SME, for me, Rebecca, has 2 aspects. One is their business themselves benefits the economy, benefits the human welfare index, and benefits the environment. But crucially, they sustainably trade and they grow. And if they don't have help across all the different parts, they will fail internationally. And that will be a huge shame because they grow faster and they default less.
Really passionately said, and I couldn't agree with all of that more, as you know. And I think what's really interesting and is the fact that we're looking at companies that are ordinary everyday companies. They don't necessarily need to have the sort of social enterprise structure or a green agenda. They can adapt, and there are carrots and sticks to help them do all of that, including access to financial services in a way that they've never been able to access it before, if we can trigger this legal reform and make sure that the solutions are there for digital. So I mean, on that note, that's hugely positive. in a year's time, because we will be here in a year's time, and we will be talking about what we're doing in 2023. But what are we going to be talking about in this time next year, and how do we get there?
I think we'll still be. I think these three big issues, these issues will still be huge, right? The difference is what we're speaking about is they're now crystal clear issues. We'll be sitting there. We'll say, right, the UK and Singapore, for example, and this is to be fair to the UK, they've been pioneers on the digital. It'll be going before Parliament in the UK in May. How many companies have actually adopted these digital laws? Which, as I say, that is literally liquid gold. So I think it'll be reporting on progress both on that and also on the issue of ESG standards. Those two things we'll be talking about from policy perspective. You should be asking me next year, how many companies from your barometer, John, regard ESG as an opportunity? It was 14% last year. Is it now 35? Is it now 40? And then you'll be asking me, as a private sector, has your bank helped companies grow internationally? Has it helped them save money? Has it saved time? So it'll be a progress report in a year. I don't think the issues will fundamentally change.
That's absolutely amazing, John. It's always an absolute pleasure to talk to you, canter through so many issues, and to hear the results of your trade barometer, which give us a real insight actually to the exporter journey. Thank you so much for your time, and thank you as well for participating in everything that we're doing and giving us such a loud shout out. It's absolutely marvellous. To everybody listening, thank you very much. That's the close for today, and tomorrow morning we will be starting off with a conversation from another Santander professional, Mark Ling, and we will be talking about what we have learned from this week at the COP26. Thank you very much indeed, and see you all tomorrow. Thank you, John.
Thanks very much, Rebecca. Great to see you.
Bye.
Bye-bye.